The summer of discontent could be upon us. What we've seen over the last couple of weeks is a small but important change both in the Federal Reserve policy, but certainly also in the ECB and indirectly in the Japanese of Abenomics. The changes is that normally with very low inflation, the Federal Reserve would have been stimulating the US economy by making higher asset purchases or alternatively trying to do something with the deposit rates. They haven't done that, which is an indication that they're seeking and trying to get a more normal monetary policy. So put in a different way, what we're dealing with here is we've moved from an extreme easy monetary policy to an easy policy, i.e. a normalization. This normalization has made the market very nervous, and for good reasons, because with very compressed risk spreads, with very low leverage relatively to the return profile, we're seeing a market which is coming under pressure. Velocity and volatility in the marketplace is rising, which means that the measurement of risk, which is the value at risk, is being bloated, and as such it means that people are hedging all the time as the market comes down. Add now to this that technically we have broken some very important levels, certainly in the European stock market indices. Over the last 2 days we've seen the 100-day moving average break in the DAX, and we see a correction for another 4 to 5 to 6% on the basis of this hedging and bloated value at risk books. We are looking for the same in the US as the US interest rate continues to creep higher. We've seen a massive sell-off in commodities over the last 2 days. Again, gold and silver has been at the forefront of this sell-off. We perceive this to be a normalization, not a doom and gloom and not a massive change to the concept, but all of a sudden the monetary policy has become a two-way street instead of a one-way street. And that is important because that means that people cannot just sit back, enjoy the summer and be in yield chasing and buying lows every time we have a correction in the marketplace. So right now the market psychology is moving from one of complacency to a more normalized two-way street. You have to remember at the end of the day, this is good news. To be more normalized from extreme caution is good for the economy, it's good for the price discovery. So we are very constructive as we come out of the summer of discontent, but the market will, in our opinion, be very slow in adapting to this new market sentiment we have, and as such you will expect that the volatility can be quite high during the summer period. We see the balance of 2013 being having headlines like this during the year, and then we need to see the US economy and growth across the globe trying to improve. We believe that the trough, i.e. the low point in growth and the low point in political will for reform is here and right now. So moving into the end of the year, we see better opportunities. But for now, I have to advise you to be very defensive at a bare minimum. And if you are of the more speculative sort, I think the market and playing on the market's normalization will mean that there is another 8 to 10 downside in DAX, in S&P, and generally Scandinavian indexes as well. I wish you a very good summer.